Michael, how are you, man?
Awesome. It's a double awesome day.
Double awesome. Well, lots to talk about. But listen, look, really appreciate you coming on. I know you wanted to save your favorite Bitcoin podcast to last, so appreciate that, man. And yeah, we've got a massive thing to talk about, haven't we? We just huge, like what timing? A huge announcement that Square hasn't invested any money in Ethereum.
I Yeah, I woke up this morning and I saw that and it made reading Twitter worthwhile for the year.
Yeah.
It was just an extraordinary piece of news.
Why do you think why do you think they haven't put any money into Ethereum?
Well, I think in the crypto industry, there's two competing schools of thought. You can describe crypto as Vegas in cyberspace, or you can describe crypto as the savings and loan at the end of the universe. And if what you wanted was the savings and loan at the end of the universe, you want Bitcoin. It's about trust, reliability, put it there, leave it for 30 years. And you don't really want lots of exciting things happening. And on the other hand, the entire DeFi movement and the Ethereum movement is all about smart people doing complicated things in a hurry in order to get some edge on some other smart person. And it's a little bit too much of a wild west. And so if you're attracted to the one thing, if you're a trader, then maybe you like that. But I'm not a trader.
Hmm.
I mean, corporate treasuries aren't traders. They're looking for the savings loan at the end of the universe.
Right, man. Well, listen, look, it's a strange one because obviously you made a huge like bet on Bitcoin, right? We'll call it a bet for now. Um, Square have a much bigger balance sheet, but have put $50 million in. But in some ways, it's also just as important because that's a signal to Silicon Valley. That's a signal to other Fortune 500 companies, right?
Oh, I think it's more important. I think it's more important because, first of all, Jack is such an iconic figure and such a leadership figure in the world. I mean, he's a worldwide leader, right? He represents something to everybody. And second, they didn't they didn't make this move as just a financial gesture. They don't need the money, right? They have more money than God. 10 billion in cash that's sitting around, but the market caps of Twitter and Square together are 150 billion or closing in on 200 billion or something. So this is not about money. This is about empowerment, right? And if you read their press release, what they said is we believe the cryptocurrency and Bitcoin in specific is going to empower an entire class of people all around the world to live a better life. And and I think that that's incredibly powerful because now you have two different reasons that you might want to invest in Bitcoin. One reason, we think it's a good treasury reserve asset and it's safe and it's financially responsible. The second reason is there's 932 million people in those 20 countries with collapsing currencies that have no chance at a decent life. And this is a lifeboat for them, right? It's, as I said, it's like an arc of encrypted energy to escape the flood of a currency collapse. And I think Square, they wrapped that entire move with the agenda of make the world a better place. Who wants to stand against that?
Who exactly? Listen, so I imagine you woke up, you saw that, and first went, "Yes, amazing." And then I imagine then you also checked out the Bitcoin price, but I haven't checked it and confirmed it. But I did see someone say on Twitter that the MicroStrategy stock price went up 5%. Is that true?
I believe it's up today, and and I am not allowed to comment on the stock price going up nor going down, and so I don't make a practice of that.
Well, I can.
Uh, but I'm delighted that Bitcoin price is up, and I'm delighted that this is injecting positive, constructive, inspirational energy into the space. and I think only good things are going to come from that.
Well, I didn't see any MicroStrategy news today, so it's that thing where MicroStrategy is like a Bitcoin ETF now. I mean, you can't comment on that, but I can. Well, listen, look, that's an amazing start to the day. It's that kind of. I know you're aware of Parker Lewis and his writing, but it's like that gradually, then suddenly, it's just like it's another one. But this is such a big one. I do wonder whether this will signal out to Silicon Valley, because people do respect Jack Dorsey, and well, firstly, I wonder whether Twitter themselves will also make an investment. But I wonder if the likes of Facebook will be looking, or other Silicon Valley companies are thinking, look, we're sat on all this cash. Why are they doing it? Should we consider it? Because even though it was 50 million, it was actually a very small percentage of what they have on their balance sheet.
Yeah, well, I think there's a parade of wonderfuls that can follow this. For example, there are a lot of people that will look to Square as an extraordinary, progressive, successful company, which they are, right? It's just extraordinarily successful, and they're going to want to copy this because who wants to argue with success, and especially technology progressive success? There's another group of people that are going to stop and say, what did he mean when he said Bitcoin is a tool for empowering those in the world that don't have other options, right? What's this empowerment message mean? And they're going to start thinking about it, and they're going to realize that people in sub-Saharan Africa can't buy Apple stock and wire it to their loved ones in order to avoid being beaten to death by a collapsing currency, right? And that's the difference, right? Nobody's going to buy a T-bill. They're not going to buy bars of gold. They're not going to buy stocks. They're not going to buy real estate in order to avoid having the currency collapse and being impoverished or starved to death. But in fact, right, the real news from yesterday that I tweeted about was Bitcoin hits an all-time high in Turkey, which is meaningful for 90 million people. And there was an awesome story on Medium about the other 19 countries where the currencies are also collapsing. And so when people start thinking about an investment that's going to change the life of 1 billion people, and then they start thinking, well, what's the next billion people that are going to have their currency collapse? And then they start seeing there is a fundamental difference between buying Amazon stock and buying Bitcoin, because Amazon stock's not going to fix the problem for 1 billion people in the world. And I think that that's awesome to bring that to people's attention. I think the third wonderful thing that's going to come from this is that if Jack does it, there's a whole raft of other billionaires that are sitting on other companies with treasuries, and they start thinking, well, if it's the right thing to do for the world, and if he did it in a courageous fashion, then why shouldn't we do it in a courageous fashion? Because it's the right thing to do for the world. And that takes us to the fourth wonderful. The fourth wonderful is all of the hedge fund and fast money dudes on Wall Street just sitting around talking about how to front run all the non-traders, right? I'm not a trader. Like, I buy it. I'm thinking I'm going to hold it until you rip it from my cold dead fingers, right? If I don't fail in whatever else I'm doing in my life, it's going to be passed on to my heirs and my heirs' heirs. And if I run into a crisis or a problem, I'm going to take some out of my piggy bank and I'm going to convert it to fiat to solve the problem. That's the view of a long-term investor. That's the view of someone with conviction, right? Like, that's why it's silly to talk about I sold it this week so I could buy it cheaper next week. You look pretty silly on a day like today. So there's that group of people, but there's another set of fast money traders on Wall Street and the hedge fund guys, and they're thinking and obsessing over the shape of the bend of the reaction curve. They're trading gamma, and they're thinking, I'm going to short it to buy it, to short it to buy it, to And now they're thinking, well, maybe we can get ahead of the guy that's about to follow Jack Dorsey's lead. So Jack did it. Then there's someone who just is greedy, right? They just want to make the money. They're going to get in between to front run the next decent, committed investor. And that creates its own self-perpetuating thing. And of course, then you have just a raft of publicity and news stories, and you'll have a whole set of boardroom conversations and corporate conversations, both not just in public companies, but in private companies. And in those private companies, they're thinking, well, this is not even that, 1% means it's immaterial, which means you probably don't have to go to the board and get, and you don't have to go through a whole set of approvals that you would need if it became 10% or 20% or 50%, right? Like what we did, we wanted to telegraph because it's not 1%, but 1% makes a difference. And if you're a private company, well, you don't have to worry about that. You just move. And so I think that there's just an avalanche of wonderful things that happen, and all of them add up to this simple observation, right? Bitcoin's a good thing, and it's a safe thing, and you might want to get some and catch it in case it catches on, right?
Yeah, yeah.
That's the story, and that's enough. That's a pretty good story.
Well, but there's another interesting news story that came out. Well, something I saw on Twitter today. I don't know if you noticed, but Argentina's heading to its 10th default. But there was a tweet by Professor Steve Hanke, who, by the way, is not a Bitcoin believer, but this was interesting. He put, Argentina's net liquid foreign reserves have evaporated, and the peso is tanking again. Argentina has no strategy. And Argentina was really interesting because I always talk about, like, if I try and talk to my friends, go down the pub, and they're like, Pete, tell me about this Bitcoin thing. And it's always hard to explain it. When I was out in Uruguay, I was sat down with a couple of people from Argentina. It's so easy to explain. They just get it. You just explain, yeah, it's money the government can't steal, they can't inflate away, and they can't seize. They're like, oh, how do I get some? So to see that
Hey,
news
Peter,
on the same day.
I feel for Argentina,
Yeah.
and I have business in Argentina. In fact, we are the number one business intelligence company in Argentina. We've got a great business there, and I've got great employees there. But you want to hear two good Argentina
Yeah, tell
stories
me.
from a non-Bitcoiner?
Yeah.
Okay. Here's my first. I had $1 million in Argentina 10 years ago in a bank account. And I read the news, and there was no Bitcoin. And so I did the best thing I could. I said, put it in Bank of America's branch in Rio, and in Buenos
Yeah,
Aires,
sorry.
I guess. I've got to get my city straight. Put it in a Bank of America in Buenos Aires. Good. Now move it into a US dollar account. Great. Because I don't trust the peso. The peso is trading one peso to $1. It was pegged. And I said, I'm reading all this news that they might go off the peg, so put it in dollars. And then I said, can you just wire it back to the US? And they said, my lawyers go, no, that's illegal. Capital controls. I said, so I can't get my money out. No. Okay, we'll put it in Bank of America in Buenos Aires. Great. So in rapid succession, this happens. Press release. All US dollars in Argentina are hereby law required to be converted to pesos.
Oh, man.
Okay, your $1 million became 1 million pesos. Next day, the peg is broken, and now the peso trades 10 pesos to the dollar. And I had $100,000 worth of pesos in 24 hours. And so after being beat to death a couple of months later, it's like, oh, and now you can wire out your money if you pay a 20 or 30% fee. So my $1 million became about $80,000 in short order. And that was my first experience with, and we were a wealthy company, right? So it just irked me, but I had money elsewhere. If that was the only $1 million in the world, and you took 90% of it, it crushes you. So I felt for the Argentines then, but we kept doing business, and we do business in pesos, blah, blah. 10 years go by, 9 years go by. The year is 2019. I still don't know Bitcoin. I start reading the Wall Street Journal.
Hold on. You're saying are you
Argentina,
telling me 2019 you still didn't know Bitcoin?
I was an idiot.
No,
Uh,
no, no, no,
like,
no. That's just interesting.
no,
I'm going to come back to that.
I look, I tweeted about it in 2013. I forgot about it. I got wrapped up into the rest of the world. I was busy doing my thing. There are a lot of reasonable people that are just busy doing other things and they don't
No,
focus.
but it's not.
So I really didn't
Yeah,
know.
no, it's not a criticism.
Here's what I know.
It's like it's how quickly you moved then when you found out.
You know, wars have a way of opening people's minds to new ideas. You know, if you read The Structure of Scientific Revolution by Thomas Kuhn, he talks about paradigm shift, and the message is people don't embrace new ideas until they die, and you have to wait for the entire generation to die. Intelligent people don't embrace new ideas till they die, unless there's a war.
Right.
And the war is the one exception. Like World War II comes along, and you get some new ideas. Or as Trotsky said, you know, you may not be interested in war. War is interested in you. And when there's a war on COVID, or there's a war on currency, and you get slugged in the face, or when the currency collapses by 90%, then not being aware of something flips to, oh, my house is on fire. Where was the fire extinguisher thingy again that I didn't think about? So I think this is a year that opened a lot of people's minds.
Yeah.
2019, I still don't know Bitcoin. I read the paper, the peso is crashing again. And I start having anxiety about our cash. I'm like, how much money do we have in Argentina? My finance people are like, I think $1.5 million. Now we had $600 million elsewhere, you know. So they're like, well, it's just like it's not that much. First, their answer was, it's not that much. I'm like, tell me how much again? $1.5 million, maybe two. I'm like, well, tell me exactly how much. I still care.
Yeah.
Well, like $1.6 million. I said, so can we repatriate it? Well, no, there's capital controls. We don't know how to do that. I said, can you buy gold with it? No, we can't. We can't buy gold with it. I said, can you buy anything and carry it out of the country? Well, we can't. We don't think we can do that. I said, can you buy it? Okay, this is true. I literally said to my finance person, my treasurer, with my general counsel in the room, I said, can we buy a yacht with it and sail the yacht to the Caribbean?
Please tell me you did that.
They looked at me like they looked at me like, are you at, you know, just like you can't tell your boss that he's batshit crazy, but they're like, we don't think we can do that. I said, Peter, I said, I'm deadly serious. Buy a boat and sail it to the Caribbean. Get the money out of the country. They said, we don't think we can do that. And so that was an example of me just not winning an argument or not winning discussion. The final result or the resolution was we bought some sovereign debt, something from the Argentine government that we could legitimately move out after we took a 20% haircut.
Man,
you know, and so that was my two Argentina stories. Now, if I had it to do again today, the question I would have asked, instead of saying, can you buy a boat and sail it to the Caribbean, would be, can you buy Bitcoin?
Oh, yeah, of course. Of course. Oh, man. The country's such a basket case. I mean, a lot of places in South America are. Uruguay is one of the places I've been that's okay. But, I mean, I went out to Venezuela earlier this year. Again, it's just, these places are such a basket case. But explaining to Bitcoin to them is, like, really, it's really easy. Anyway, listen, we've got a lot to get through. Did I can't remember because we spoke before. Did I tell you about that time you first messaged me?
Tell me.
So
I remember doing it.
So on the day that MicroStrategy,
I knew you before you knew me, Peter. I knew you. You and I were on a first name basis. I had listened to 10 or 20 hours of you and what Bitcoin did before you'd ever heard of me.
Yeah, I hope that's more. You listened to more of that than you did a pomp. But listen, look, I get my DMs are open, right, and I get a lot of messages, and and a lot of them are just like nonsense. So you have to just you filter them very quickly. On the day your news came out, it was like you'd messaged me on you DM me, but you didn't send me a message. You just sent me a link to the tweet, and I was just like, whatever, I don't care, whatever it is, and just ignored it. And then I saw, I think it was something like Nick Carter tweet about it. I was like, oh, what's this? And read the story. I was like, oh, that's cool. I should try and talk to the CEO, try and get him on the podcast. So I was Googling MicroStrategy CEO, and it comes up Michael Saylor. I'm like, okay. So I click on the link in the Google search results. It comes up with you. And I'm like, oh, his DMs are open. I click on your DMs, and there it is. And there's the message for you. I'm like, oh, shit, you messaged me. So big confession
Well,
there.
Peter, I didn't know anybody in the Bitcoin community, and they didn't know me. I was a
You're a
non-person,
sniper.
and so I made a list. I made a list of the 12 or the 10 most influential people in the Bitcoin space, and I thought, well, maybe if I message each of the 10, one of them will notice it and they'll post it because no one's following me. And so I was doing the best I could with the tools
Yeah.
that I had at my disposal.
Well, my mistake. Well, listen, look, we got here in the end. Bit of a you've been busy now this last few weeks, right? In the
Yeah,
Bitcoin place.
yeah, we're pretty busy doing a lot of things, working hard.
No, I mean, like
Never a
you're in the Bitcoin space. You've been doing a lot of interviews. You've been become known. Like, so confession number two. I haven't listened to any of your other interviews yet, and I did that on purpose. I tend not to listen to other Bitcoin podcasts because if I know if I'm going to interview a person, I don't want to be distracted. This one I
Oh,
purpose.
they're deadly boring.
Yeah.
They're deadly boring, and I kept all the really good stuff for
Well, of
you,
course,
Pete.
like you said, I mean, like I said, it's your favorite podcast. So, but no, I haven't listened to the others. I do know you've talked about like your career history. I know you talked about that with Pomp, so we won't bother doing that. But there is a bunch of stuff to talk about. Firstly, though, like how are you finding it? Because you said 2019. That's really interesting. So you discovered it, obviously went deep down the rabbit hole quick, pulled the trigger, which is amazing. But how are you finding navigating the space? Because it can be great and it can be unforgiving. Um, but how are you finding it?
I, I like Bitcoiners, right? I mean, I love everything about them, right? I mean, I love the Austrian economic sect, and I love the libertarian sect, and I love the people that have read science fiction and Robert Heinlein and the moon is a harsh mistress and there ain't no such thing as a free lunch and the Citadel people. I love that. And I love the people that are focused upon how we empower the billions of people, bank the unbanked, and I love the techno enthusiast, and I love the progression of it, and then I love the refreshing contrarians and the skeptics and the like. So it's an interesting community with people with a lot of passion. Some of them can be like people can get bent out of shape over the smallest thing. You know,
Yep.
you'll trigger them if you were to say something little. You know that once somebody thinks that their encryption is better, they're like Bitcoin's not encrypted. You know, or once somebody thinks their transactions are fast, they're like Bitcoin's too slow. Or once they think that you know the ones that want to bank the unbanked get kind of upset that maybe people with money might get a benefit from it, you know, and they're like, we can't have the institutional interest hijack this thing. And so there's a lot of people that wear their heart on their sleeve, but I'd rather have it that way than the other way.
Yeah.
I mean, the other way is just a bunch of mercenaries that don't give a damn about anything. Like the guy that buys Bitcoin so that they can make a 3% trading yield and sells Bitcoin, like
Snore.
that's too mercenary for me. I don't want to be in a world full of mercenaries that are just looking at me as a one night stand.
It's boring as well. Um, okay, before we get into it, we like I said, we've got a lot to get through. The one thing I did want to talk to you about is how much exposure have you had to how the kind of open source dev world works? Because one of the things I know it's a bit cheeky, but I was gonna pitch it at you is that um you've already made a massive investment, but have you considered, or would you consider like dev sponsorship? Have you spent much time looking at that stuff?
As I got in the Bitcoin community, I realized that the real unsung heroes of this space are the developers that are working on the software, especially things like Bitcoin Core. If it doesn't get upgraded, we all have and maintained, we all have a problem. And if it gets upgraded too enthusiastically, we still have a problem. And so then I started thinking, who's paying all those people to keep the heart, and the soul of Bitcoin beating? And that's a rabbit hole that I'm moving down right now.
Hmm.
I've been on a journey to get more educated as to how how Bitcoin Core and how Bitcoin software in general gets maintained, tested, developed, start to understand the consensus mechanisms, etc. And I would say the conclusion I'm coming to is we need to support it. So, so Peter, I think you convinced me. Uh, our company is going to start by supporting a Bitcoin developer. I got to figure
Oh,
out which Bitcoin developer,
yeah,
but uh, but we're going to start by supporting one, and then I think we'll evolve and increase our support over time because
amazing.
the unsung heroes of this space that are doing they're the keepers of the flame are the developers,
Hmm.
right? So if you want this thing to last for 30, 40, 50, 100 years, we actually need passionate developers that are going to maintain this. So yeah, it seems like I should be supporting that effort. The company should be supporting that effort.
Very
I
cool.
I probably took that for granted when I started, but now I'm not. Now I'm appreciating the need for it.
No, but that is so cool that, because it does rely on it's like this one of these weird things with Bitcoin. Like, you can own it, but some people have a sense of responsibility to support it in other ways. And there is a lot of people supporting developers. The fact that you would do that's very cool. Look, we'll have that conversation offline, because I guess we have to think about who would be the best person to speak to about who you would want to consider supporting, and you might want to figure that one out yourself. But that's very cool. I will help you out with that. Okay, so that's very cool. Well done, man. That's amazing. Okay, so the the first area I want to go into is that, and interestingly, Square came out with their announcement today and also talked about releasing almost like a guide for people who wanted to invest in Bitcoin. So I thought it'd be interesting also just to go through your experience as well, cover that before we get into some of the juicy details about like what you think about Bitcoin, some of the interesting topics where I'm sure we'll battle on some of them. But can you just talk me through the timeline of how this happened? So you discovered in 2019 what the timeline was up until the point where you, not like the internal one, where you made the decision to think, yeah, do you know what? We need to do this. Can you talk me through that kind of like timeline?
I think the world the world undergoes this enters into this pandemic and all the geopolitical reaction to the pandemic starting mid-March. By mid-April, it's pretty clear to me that there's going to be a K-shaped recovery. That what we've got is a massive Fed intervention, which has inflated the value of fixed income securities and stocks back to all-time highs or on the way to all-time highs, as though there was no pandemic and as though there is no lasting consequence or economic consequence to the pandemic. And then on the other hand, Main Street's shutting down, and there's there's what they say on TV, and then there's what you think. And what I thought was everybody on television was being very optimistic. As we started with 15 days to stop the spread, and then it became maybe by Easter, and then it became, well, not quite yet, and then it became one thing after the other. And so by April, it's pretty clear there's a disconnect, and that disconnect causes you to question all the things you thought you knew about money and all the things you thought you knew about the economy.
Mm.
Uh, if you believe that inflation is less than 2% and the Fed is managing this really well, then maybe you would have noticed that interest rates just aren't jumping back up to 5% and they're 2.5. And you're thinking, well, maybe we'll get there to 5, and it's like a 2% thing. When interest rates go from 2% to zero in a matter of days, and then when the sentiment becomes, well, I'm not thinking about raising interest rates, and I'm not thinking about raising interest rates for many years, and then you realize, well, assets are going up, cash is not going up in value. Inflation in theory is not here, but asset inflation is obviously here. So if there is no inflation, how come I can't afford to buy anything that's going up in price so rapidly?
Yeah.
If there's no inflation. And from that point, you start to reassess your views about the impact, the intervention of the central bank, and the impact of the government. And you didn't really have to address it before, but then you have to address it. So I would say I was kind of woken from my slumber, or shaken out of a lethargy, by about mid-April. And then I started about 6 weeks of intensive exploration. And that's when I discovered the Bitcoin community, the crypto community. I start going down the rabbit hole, and I'm reading the Internet of Money, and I'm listening to a bunch of your podcasts, and I am listening to some podcasts. I'm not going to
Fuck
lie,
that guy.
but I'm also watching debates between Eric Voorhees and Peter Schiff,
Yep.
and then I eventually I find I find at some point, I remember you saying you disagreed with Seyfedin's view of art
Yeah, he's wrong.
and food, modern art. And I'm like, who is this Seyfedin dude?
Hmm.
And because you're talking about him, so I guess I better read it. And I understood what you were saying, and I get that. And I but the nuggets I took out of the book were the 7% expansion of the monetary supply for 10 years,
Hmm.
right? And then that's the
Yeah.
eye-opening thing for a decade. And then once you see that the monetary supply is expanding at 7%, and there is no inflation and interests are low, and then you see that that the S&P 500 is going up by 8% a year for a decade, and then you start looking at the bond rate, and you're like, okay, well, interest rates on the 10 years went from 550 basis points to 50 basis points. Then you realize that a $1 million bond inflated to be $10 million. You have to pay $10 million to get the same $550,000 in interest that you could have gotten. Sorry, to get the same 50,000 in interest that you could have gotten for 1 million 10 years ago. And that means the inflation rate on a bond is 22%. And so once you get that, and that's an insight I had between April 1st and June, then I realized I'm on a melting ice cube of $500 million worth of money. The purchasing power is dwindling at 10% to 20% a year. I have to do something. And then it's becoming a question of, what are you going to do? And I, you know, I cycled through all these other investments, but Bitcoin is the purest. It's the purest treasury reserve asset. If you're looking for a, if I had $100 million and I wanted to put it into a vault and take it out in 30 years, maybe if I wanted to put 100 million in a vault and take it out 100 years from now. And most people, they roll their eyes when I say this, because they're like, well, who's going to live 100 years? Who thinks about it? That's not the point. The point is, when you're thinking about 100 days, there's just a bunch of noise. It's all irrational. There's that phrase, the market can stay irrational longer than you can stay
Yep.
solvent. And so when people think about 90 days or 1 year or 2 years or 3 years, then you're just making a bunch of decisions based upon the greater fool theory. I know it's stupid to do. It's stupid to loan money at 1% interest. But if there's a fool that's going to actually agree to loan it at 50 basis points for the rest of my life, I'm actually going to make a lot of money when that other fool steps into that trade. So the greater fool theory kind of gets into the mix when you take a 1, 2, 3, 5 year time frame. When you go out 10 years, it gets different. But when you go out 100 years, it's extremely clarifying because now you realize the structural defect of every other idea you have with a gravitas. So when I started saying what am I going to do with this money, and I started thinking 10 years out, 30 years out, 100 years out, and then I discounted back, it became clear that real estate, bonds, stocks, corporate debt, sovereign debt, gold, silver, commodities, none of these things are going to work. They all have defects with them, and we can go into all of the defects if you like, but the conclusion is they all have defects, and you're going to lose 99.5% of your money if you leave it in the bank over 100 years. You're probably going to lose 95% of your money in gold, but you might lose it all in gold too over 100 years for a lot of reasons.
Tell me
You're
that one.
definitely in the best of.
Tell me that one, because I would have thought
Okay.
gold. I would have thought gold would have been a kind of safe bet, unless you think Bitcoin is destroying gold's value proposition.
But it's an important point. Maybe the single most important point, the single most important attribute of Bitcoin versus gold that people do not understand, I think, because they're not really thinking deeply about the problem. And it's this. Go into any bank in any major city in the year 1900 and put $1 million into gold. Okay, think this through. You have $1 million in the year 1900. You walk into the best bank in Tokyo and you buy $1 million of gold. How much money do you have by the year 2000?
I mean, I
Nothing.
don't know.
Because Tokyo, did they win or lose the war?
Okay, they lost the war.
Okay. In 1945, they lost the war, right? The bank failed, the government fails. Now go into Beijing in 1900. By the year 2000, what happened to your gold? It's gone. Pick a city in the Western world. Right, Buenos Aires, it's gone. Rio de Janeiro, it's gone. Berlin, it's gone. By the way, it's gone twice in Berlin. You would have lost the money in 1918 when they lost the First World War. You would have lost the money in 1945. You probably would have lost the war when the Weimar Republic failed and the Nazis took over in 1930. There are 3 regime changes. You would have lost your money. In Paris, you would have lost it when the Germans marched into Paris, in 1940. Give me a city where you would have not lost your money.
Bedford.
By the way, try New York. Try New York. You would have lost it in 1933. The United States won every war in the 20th century. You would have lost your money in New York, D.C., San Francisco, and Chicago. London? Not clear. You might have had the gold seized in a currency revaluation in London. I haven't studied that one. Off the top of my head, I'm thinking maybe you would have not lost all your money in Geneva or Zurich, maybe. That's the only place, right? I mean, Rome doesn't work. But how about Madrid? Nope, Spanish Civil War. Okay, so that's counterparty risk. In 100 years, there's a 95% chance the bank fails or the regime fails, right? 95% chance. If the bank doesn't fail, the regime doesn't fail, and nobody seizes your gold or your money, right? And the currency doesn't collapse. In the best case, miners are going to produce 2% more gold every year. If you produce 2% more gold every year, the half-life of gold is 35 years, which means you go from 100 million in gold to 50 million in gold to 25 million in gold to 12.5 million in gold. That's assuming the price of gold is flat. If the price of gold tracks inflation, you're going to get 2% more gold. You're going to lose 87% of your purchasing power over 100 years if the regime doesn't fail. But there's a problem with that because it's a commodity. Okay, I got my start in business, Peter, modeling commodities for DuPont and Exxon, like petroleum, nylon, right? Fibers, polyester, all these commodities. Do you know what the problem is with commodities? The problem with commodities is it's a dirty word. No intelligent business person ever in 100 years wanted to be known for being in a commodity business. When I'd sit around with the DuPont executives, like, oh, we got to get out of this business. This is a commodity business. This business was really good till it got commoditized. Commoditized was a synonym for destroyed, Peter. I got commoditized. I got destroyed.
Okay.
Okay. What's so great about commodity money? Okay. Now, why? Why is commodity a dirty word? Okay. Seyfried makes this point in his book. Other people make this point. And the point is this: human ingenuity, technology, and capital, entrepreneurism with technology, with capital, can produce anything on this earth that is in high demand if the price is high enough. You want an apartment on Central Park that's 16,000 square feet with a perfect view of Central Park in the year 2018? You're late, right? Impossible? No, perfectly possible. I buy a block, it costs me 100 million bucks. I build straight up 150 stories. I sell you the apartment for $150 million. Okay, I wouldn't buy that apartment. You wouldn't buy that apartment. But if you have $150 million, there's somebody in this society that can manufacture you Central Park real estate with a perfect view. It's just about amount of money you want to pay.
Mm-hmm.
And so if it's a commodity, the kiss of death is when the price goes up, everybody's going to charge into that business, and they're going to double the production of it. If the price of gold goes up, there's more gold miners coming online. When it goes up by a factor of 10, there's a lot of gold miners coming online. And by the way, that's not the problem. That's not the problem. That's a part of the problem. That's the first order problem. If I actually take the price of gold to $50,000 an ounce, I'm going to get a lot more gold miners. But here I'm going to tell you what the real problem is. When the price of gold goes to $50,000 an ounce and hundreds of billions of dollars get invested in gold mining, they're going to double the production or triple the production of gold. They're going to drive the price down, but the variable cost of producing gold is going to be $2,000 an ounce. The price is going to be $50,000 an ounce. The price of gold is going to get driven into the dirt to 40 to 30 to 20 to 15 to 10 to 5. When it gets to $2,000 an ounce, it's possible that the gold miners will go offline or the commodity producers will go online. But let me tell you what happens in commodity businesses. Every one of them for 100 years. I could give you 1,000 examples. The price goes below the variable cost because there's a government involved that will subsidize the variable cost to keep the plant running. And so if the actual fully burdened cost is $3,000 an ounce and the variable cost is $1,500 an ounce, and you thought it was going to $10,000 an ounce, it'll shoot through the fully burdened cost, the cost of capital, to the variable cost. And it might even for a while go below variable cost because it's a national champion and somebody wants to drive everybody else out of business. By the way, what's the most famous commodity in the world right now? Oil.
Well, I want to say Bitcoin.
What's happened? You would, yeah, you're a Bitcoin. We love Bitcoin. I get it.
But I know it's
oil, right?
Yeah.
What just happened to oil in this crisis?
Bro.
Did the price of oil go below the fully burdened cost of producing oil?
Dude, it went negative. They were paying you to take it.
Is there any debate about whether it went below the variable cost of producing oil? The point here is, this is why you don't put your treasury reserve in a commodity, because ultimately it becomes political. A government might decide that they want to mine gold, or they might want to buy the commodity. A company that has when you have $10 billion worth of gold mines and the price of gold goes down, you think anybody walks in and says, let's shut down all of our gold mines, liquidate them for cash, and invest it in Amazon stock? You can move liquid capital from Amazon to Apple to Bitcoin. You can't move gold mining capital. It only does one thing, which means that I am locked, like my knees buried up at the concrete, and all I know how to do is I know how to make more gold. And so here, you're damned if you do. If the price goes up, gold mining is going to triple. If the price goes down, gold miners are going to keep producing gold because they got to work off their fixed cost. By the way, this happened with oil during the fracking explosion. We produced 5 million barrels of oil in this country a day. And everybody said, oh my God, the price of oil is going to $100 a barrel. It's a crisis. We fought wars over this, Peter. 2 wars over
Mm-hmm.
this. We fought wars in order to go protect our oil interests because we thought the Western world was going to be choked to death if we didn't have access to cheap oil from Saudi Arabia. So what happened? The price of oil went up. When it got to $100 a barrel, you know what happened? Big banks, the big famous bulge bracket banks, they would form conferences and they would bring high net worth individuals together and they would say, there's an opportunity to invest billions of dollars in these new fracking operations. And they can produce oil for $45 a barrel or $40 a barrel. And the price is $100 a barrel. And we can sell it for $70 or $80 or $90 a barrel. Billions of dollars flowed from Wall Street into fracking, and Chesapeake Energy and other frackers came online. The production of oil in the United States was pegged at 5 million barrels a day for like 50 years. And then in the next year, it's like 2010, it goes 6. And 2011, it goes 7. And 2012, it goes 8. And then the next year, 9. And the next year, 10. And this thing that everybody knew was impossible to produce, that we went and fought wars in order to. Generally, when you fight a war, it's because you think it's pretty important,
Mm-hmm.
right? Right. We thought it was impossible to produce oil until we just put some billions of dollars into it. And we took capital and we took chemistry and some technology and we dynamite some shale fields. And it's Peter, it's very hard to do. It's hard to put a man on the moon. It's hard to make an airplane not fall out of the sky. It's really hard to create steel. You screw up with the steel and it overflows, it falls on the concrete, the water in the concrete superheats, the steel explodes, it becomes a bomb, it kills everybody for hundreds of meters in every direction. We're surrounded by hard stuff that human beings figured out how to do because they had an incentive to do it. So we figured out how to produce oil. And there's no oil crisis in America anymore. We have so much oil, we tanked the price of oil. We drove the price of oil so far down that we're ready to go fight a war to get the price of oil up. This is the problem with
Okay.
commodities. And this is why you would be a fool to put all of your life savings into commodity money. And this is why, yeah, gold. I joke. I say gold peaked in the 19th century. It's the best thing we had until we came up with something better. Bitcoin is 21 million gold coins, and by the way, Bitcoin mining is so much better than gold mining. I don't think people get this. Let me make one
Mm-hmm.
more point. If you put $100 billion into gold mining, you have 100 billion of special purpose capital, and the only thing you can do with it is flood the money with gold, and you will do that until you can't anymore. The gold miners are the enemy of the gold owners. You see, they're your enemy. They're trying to dilute and debase your currency. They're not your friend. Gold miners are at a war with gold owners. If you put $100 billion into Bitcoin mining, you're going to buy arrays of SHA 256 miners, and you're going to buy the next generation, the next generation. By the way, what are they good for?
Mining.
Nothing, nothing other than Bitcoin mining.
Solving
You
algorithms.
can't get these on. You can't run data centers with them. you have committed to. By the way, there's only one thing you can do with them, which is you can provide security, hash power to the Bitcoin network. You can defend to the death the Bitcoin holders' assets for the next 100 years. That's all you can do with it. You can't create any more Bitcoin. And so the beauty of it is you're making a capital investment in a special purpose asset that has no purpose in the universe other than to protect and nurture Bitcoin. And that's a good thing because because you can't produce more of it, you could just make it better. And if the price of Bitcoin goes down and you own this equipment, you're not going to sell it to Amazon. You're not going to give it to Google. The only thing you're going to do with it is keep running it until the price of Bitcoin or the price of running it is less than the marginal cost of your electricity. And by the way, you might keep running it below the price of electricity because your government, the nation state that has the Bitcoin mining facility, might very well view that the same way that the Saudi Arabian government viewed oil, which is we're just going to run our Bitcoin mining rigs until we drive out all the high cost producers and we're going to get the hash power. And when the price of Bitcoin noses up again, then we're going to own X percent, more percent. So what you have is you have a dynamic, but it's so much more constructive to the price of Bitcoin than oil drilling is to the price of oil, or gold mining is to the price of oil. Bitcoin is not a commodity. It is a specialty, the ultimate specialty, because it is ultimately scarce in the universe. And as people put more capital and more ingenuity into it, they make it better. And with commodities, gold, silver, real estate in Manhattan, you know, what happens when Tesla price goes up? Well, they can mint more Tesla stock in a heartbeat. And so you can produce more of most things. Name something in the universe that is a liquid treasury asset that you can't produce more of if the price goes to infinity.
Bitcoin, man. Bitcoin. But listen, look, I
I,
get it.
I tried everything else. I couldn't find anything else, Peter. Like I looked at everything else. I couldn't find it.
But look, I agree with you, and that's brilliantly articulated. But still, let's just take a second. Bitcoin isn't definite. It does have its own risks, limited, and I think things like what you've done and now what Square have done is actually building a regulatory moat around Bitcoin. I think you're creating, as miners defend the security of Bitcoin. I think you're defending Bitcoin's legitimacy, because if any government, specifically the US government, was to, let's just say there was an attempt to ban it, they would be on shaky legal ground with the likes of yourselves and Square. And if enough companies have invested, I think there could be a challenge to it. That said, all I'm saying is there is still a certain amount of risk. And when you're sat there with a $500 million melting ice cube, you could have said, we'll put 100 million in and we'll put some in gold and we'll put some here, some there. You could have moved your money around and hedged your risk, but you didn't. You just went balls deep in Bitcoin. You're like, fuck this, let's do it all. So, like, that's some conviction that you had.
When the war arrives, you got to choose sides.
Okay. All right.
You're one of those nobles during the War of the Roses, and the Lancasters are coming across from the left, and the Yorks are coming across from the right. You can stand in the middle, but I think you kind of have to make a decision, right? And this is a time period where I think everybody's got to decide what they stand for. I mean, don't you think?
Well, no, I agree. Listen, look, I made a show shortly after your purchase with a couple of other guys, and I went right out and I put, look, my business is small. It's small. It's a podcast business, right? 2 shows. But the amount of money sat on the balance sheet relative to me and my income was high. We're not talking we're talking six figures. So for me, that's relative and that's high. And I became nervous about holding pounds. So I've moved up to 60% of my business balance sheet, and that's money I don't need. So I have my like ongoing working capital, which absolutely fine. But like this is the money where I'm not going to pay out as a dividend, and it's just sat there. So I moved 60%, and I'm personally up to 80% now because I guess I had certain amount of conviction. I got more conviction from what you did, so I picked a side, I guess. But still,
Yeah, I I think there's just a bunch of good things going on right
yeah,
now, and I agree with you. There is risk to anything you do in life. There is every decision you make in life.
mm,
There is risk, and if you're afraid to take any risk, you'll never do anything.
yes,
You'll never go anywhere. You'll never try anything. You'll never do anything. Right. And so we all have to deal with that. And that's part of being an adult.
mm,
That's part of the human condition. And when, when I look at the risks in Bitcoin, there are regulatory risks. By the way, there are regulatory risks that are different across every single
yeah,
jurisdiction,
that's fair.
right? It's different in Wyoming versus New York versus Florida versus the US versus Russia versus China versus Japan versus whatever. And it's changing all the time. There's a whole set of challenges to be overcome. And there's a huge community of Bitcoiners that are working in all their jurisdictions to do the right thing and to overcome those challenges. Then there's a set of risks in the technical domain, in the software domain. We could actually get really enthusiastic and put so many features in the thing we break it. And I'm a software. I've been in software for 30 years. You know, Peter, most of my failures they weren't um, they weren't bad ideas. They were good ideas pursued too enthusiastically. Right? Like people
No, don't
think,
say
oh yeah,
that. You've just gone after Bitcoin enthusiastically.
I am enthusiastic. But the point is, like, you sit down and you think I can build this application and I can put 37 features in it, and it fails and
Yeah.
tanks. And then you realize the guys at Instagram created a piece of software, and all it did was like share a photo, and you couldn't even resize the photo. And when I looked at it, I thought there's 1,000 photo apps that are better than this, but theirs is the one that won because resizing the photo wasn't critical to the photo network. What was critical to the photo network was speed and simplicity. Too often, enthusiastic technologists they want to add a feature, and with the feature comes an attack surface or a performance problem or an instability,
Uh-huh.
and that kills the network. And so the challenge is to have 10 ideas, but to only embrace one idea, and to have the humility to know that just because there's 100 things I could do, maybe there's only one thing that I should do that I need to do, and the others are just undue risks that are probably going to be counterproductive, and they'll either destroy everything, you'll wreck the entire business, take it to zero, or they'll make it mediocre. And so there's technical risk in Bitcoin, and there's a whole community of people fighting that technical risk right
Mm-hmm.
now. And we want to pray for them that they make the right decision, right? I mean, but and then there are the miners that are running and they're struggling with all of with hardware risk and power risk, etc. I kind of think about the keeper of the flame. You know, that's such a strong metaphor. For example, have you ever been to the Pantheon in Rome? It's not the Parthenon, but the Pantheon. It's a beautiful building built by Agrippa, who was
I think I have.
who was Augustus's right hand man, the guy that won the war for Caesar Augustus, and he endowed this building,
Yes, I
the
have.
Pantheon. It's a gorgeous building. You walk into it; it's got a big
Yeah,
obelisk in the middle,
and
like
the light comes through it.
yeah, and you
Yeah.
could never forget
No,
it if you've ever walked in the building because this bolt of light comes
yeah.
in. Okay, why do you think that lasted for 2,000 years? because most buildings don't last for 2,000 years.
I mean, I guess because it was built on solid foundations.
I would like to say that,
And it was defended.
but,
I don't want to say it's defended by the Italian army.
it's easy to build a thing. It's hard to maintain the thing, and it's really difficult to profit from a thing. And so what you learn over time is that with time, everything gets decimated. Everything is torn down.
Yeah.
And the only way it's not decimated is you have to maintain it. The reason that building's still standing 2,000 years later is because it was adopted as a church by the Roman Catholic Church. Okay. And you had 100 generations of monks and all of the cash flows of the Roman Catholic Church, or the church through the ages, flowing into maintaining that against corrosion and the destructive force of rain, and you name it. They rebuilt it, they maintained it. If the church had not adopted that, it would have crumbled eventually. And so when I use the word keeper of a flame, you ask, how do I get something to last hundreds of years? Right? What's going to last hundreds of years? Like Oxford, Cambridge? It needs to be an institution, St. Peter's, St. Paul's, something that someone feels a religious passion about. Like it's important enough for me to lie down in front of that tank for that, right? Mm-hmm. It's important enough for me. My son, my daughter will carry on. This is in my will. I will leave, as my last will and testament, I will leave all my money to the maintenance of the thing. And so when I look at Bitcoin, I think it's the maximalists are really critical, right, to this entire thing. That's what elevates it beyond someone's science experiment, right? And there's a lot of things in the crypto space where they're tech enthusiasts and all they want to do is find a better, cheaper, faster, cooler, sexier widget. Mm-hmm. But what they're missing is their grandchild going to fight and die and protect and brag about the fact that their grandfather or grandmother did this thing? Because if you go to St. Peter's, I think it took like 180 years to build the building, right? I mean, these things take a while and they stand for a while, and people didn't do it because they thought it was a cute trinket. They thought that it was a monument to divinity. It was a way to achieve all their hopes and their values and their aspirations as human beings. And when I watch the Bitcoin network run, and I watch the software developers feed it, and the nodes feed it, and the miners feed it, and then I look at the analysts and the people that cover it and the people that promote it, and everybody's out there. They're building servers on the back end and exchanges, and they're building front end wallets, and they're building software, and they're fighting those regulatory wars. Those are the cyber hornets,
yeah, man,
that are serving the goddess of wisdom, and it's going to be a never-ending fight for as long as the thing lives. But newsflash, so is everything else. Countries, yeah, religions, institutions, families, they're all never-ending fights. The question is, what are your values, and how are you going to spend your life force, and what do you care about, and what do you want to be defined by?
Okay. So you make the decision, you get your absolute conviction, you bowl into work one day, you sit down with your board, and you're like, lads, listen, I've got an idea. Like, how does that work? How do you first deliver that? Like, did you have to counsel some people internally first? Did you sit down with your board and go, I've got an idea? Like, how did that work?
For something like this, you need the consensus of the officers and the directors of the company, and they all have to internalize it, understand it, believe it, and support it, and they all have a voice in it. So first, I collected a small curation of materials, things that make the case, about call it 3 hours worth of YouTube videos and a number of documents. And by the way, there's a Bitcoin section on MicroStrategy's website for anybody interested in this, and we've actually created its own category. And in addition to some of my videos, there some of the videos that I relied upon that I showed to the board are there, and then some of the documents and some of the white papers are there for anybody else to look at, including some of our financial filings. So we've tried to curate this so anybody else can just go and look. But what I did is I curated a set of materials. Then I had one-on-one meetings, right?
Mm-hmm.
And I think what I did is I sent the materials to everybody. I said, look, this is your homework. I need you to look at all this, and watch these things because it's better explained by one of the early Andrea. There's the early Andreas discussion. There's a what is Bitcoin discussion. There's this I think a seminal debate between Eric Voorhees and Peter Schiff,
I love that debate.
on Bitcoin versus fiat. And it's kind of ironic now because Peter Schiff defending fiat seems ridiculous,
yeah,
right?
I know.
Like why is the gold like I don't even know. How can you possibly believe in gold and then defend fiat? As I don't get it. But that so I found things like that. I put it to the directors and officers. Then I met with them one-on-one, and then I answered every question. We had a discussion, and everybody told me what they thought, and some of them had some experience with Bitcoin, and some had experience with crypto, and some did not. About half and half.
Okay.
Half of them had experience, but half of them were ahead of me, and then half of them had never seen this before. So now we're all coming up to the same level of speed. And in my experience, Peter, if you want to create stress and anxiety, there's a simple way to do it. You put two people in a room and you give them a topic which takes 30 minutes to understand, and you give them 5 minutes to make a decision.
Okay.
Right? But whatever it is, if it takes 5 minutes to understand the issue, then I give you 30 seconds to make the decision. So that's the way that you have people at loggerheads with each other. And the real key to getting consensus and having everybody feel good about it is you can't jam these things on anybody. You can't rush them. Everybody needs to feel respected, and they all it needs to be symmetric information, not asymmetric. I can't have 10 hours of knowledge and you have 10 minutes of knowledge. Two intelligent people are going to disagree and fight with each other. And so first we establish a baseline, then I figure out where everybody is, then we come together as a group and we discuss it. Then corporate governance is critical in a publicly traded company, right? Here's an idea. And you and I, if you're a private investor, all I have to do is convince you that this is better than it's better than real estate, stocks, bonds, swaps, other forms of cash, random insurance policies and commodities, gold, silver, platinum, whatever, or buying another company, right? Those are all the things you can do with the money. Buy anything on earth, or Picasso's, right? You want to buy art, scarce collectibles. All I got to do is convince you this is better than that. And then we're done. And then you're like, okay, Mike, let's just put our money in this, or give me 10 million worth of it, or $100 million worth of it. If you're a publicly traded company, you've got a whole nother set of questions. How do we account for it? How do we report it? How will our partners feel about it, right? Our outside shareholders are partners in the business. So after I've finished figuring out what is the most rational course of action from an investor point of view, we have to ask the question, what's the body of settled law say? What are our disclosure obligations? What are our accounting obligations? And now, how do we communicate this to our counterparties? And by the way, we have outside law firms, and we have outside accountants, and we have the rest of our employees, and we can't do business without their support, right? So
it's a lot of people.
You could do. It's kind of like being married to 15 different women at the same time, and they all have equal
Jesus,
rights.
that's like a description of hell.
If you're, it's like,
I struggled with one.
I, but you understand, you can't just make the decision yourself. You have to, there's that phrase, if you want to go fast, go alone. You want to go far, go
Yeah.
together. So, so we have to work through that. So after I get consensus from the board and the officers of the company, everybody's got their own role to play. The general counsel has a project because he's got to work through all the legal
But
issues.
was
And
everyone
then
with the board? Was everybody on board, or were there any kind of naysayers, or does it come down to a vote and some lose out, or did you essentially have consensus on the board?
we had consensus on the board,
Nice.
and I feel very blessed. It's very We're fortunate for a number of reasons. One, um, everybody's very technology forward, right? We don't have we're a software company, we're a technology company. All we've done is make investments in technology for 30 years.
Mm-hmm.
And there's no future for a technology company that doesn't continually reinvent itself. So I don't have people on the board that aren't sensitive to the need to progress. I think the other thing is there's a lot of continuity on the board, so we all knew each other really well and we had a good relationship. It's very hard. Uh, it's hard to do something dramatic in a hurry when you're new to a relationship. And I think the third is we have a small board. There's only 5 of us on the board, right? So if it was 15 or 20 or
Mm-hmm.
25, the cost, when you get to 20 people on the board, the number of combinations and permutations of dynamic get pretty extreme. By the way, the idea of Bitcoin, right, is we decentralize everything so no one will ever agree to make a dramatic change that'll wreck it. But if you want to actually get consensus to do something, you need a finite number of nodes. So I think that we benefited from our structure in that regard and the nature of the company, and that helped us move quicker. And probably that was necessary for the first. I think that if you're the 10th company that does this, then you're just like, well, this company did it, and then Square did it, and if we get a Twitter that does it, or you get another tech company that does it, pretty soon it becomes just something that people do.
Mm-hmm.
And it would be easier.
Wow. So you make the decision. You get your lawyers on board. Your lawyers must have been like, "Oh God, man, what are you doing?" Are you traditionally kind of like one of those? I don't want to say reckless, but off the wall CEOs does some kind of like big bold moves occasionally.
It's all relative. Like relative to the CEOs that have had their job for a decade, and I've been a public company CEO for 84 quarters, okay, 22 years, which means that I've been CEO I think probably of a technology company longer than anybody. There might be one person in the entire industry, but in my industry, that's a long time. So there have been CEOs that came and went that maybe were a lot wilder than me, right?
Mm-hmm.
But they don't stick around long because your company gets acquired or you blow yourself up or something like that. But for someone that's going to be in the business a decade, I would say that I'm a bit more progressive.
Right. So
than me.
you got them on board. The lawyers must be like, were there massive hurdles for the lawyers? Like, was it a huge issue, or was it just one of those figure it out?
There's just a lot of thinking. There's a lot of thinking to go through. The entire industry revolves around precedent. So you look at every other publicly traded company that's ever done this, and of course, what we found was no one had ever done this. We found overstock,
Yeah.
and overstock wasn't really a good case because we couldn't find an example of a publicly traded company that adopted Bitcoin as a treasury reserve asset. We found Overstock had basically taken some revenues in Bitcoin, and Square doing some revenues in Bitcoin. But our use case was very different, and so and so the disclosures and the body of law would be different.
No.
And so that, yeah, it makes it challenging. But as I've said to other people, it's a project, but there are harder things. When Andrew Carnegie figured out how to make steel plants work without blowing up, it was harder.
Mm.
Any entrepreneur that's ever been successful in getting a business from zero to something did a hard thing. And so it was just a project that we went through, and eventually, right? That's why we kind of worked on it from Memorial Day all the way through June, all the way through July,
When's Memorial
and
Day?
May 30, like the end of May,
So it's like a
right?
3-month process from decision to trigger.
Something like that.
Yeah.
I mean, we went just a little bit faster, but it was like an 8-week to 10-week. I think, if you were lightning fast, maybe you could do it 4 weeks, but I just don't think you could do it in less than 4 weeks, because what has to happen is first you get consensus with the directors and officers. Then you have to go through and vet institutional grade custodians and institutional grade exchanges. You have to line up all of your special purpose legal and accounting advice and policy and understand how you're going to do that. You have to think through your control compliance systems. How are you going to handle these things? Then you may or may not have disclosures and timing. What Square did was a 1%, which means that you could make a 1% move. It would be deemed as immaterial by an accountant. And you could do that and put that, they still put it on a wire. But at 1%, you're almost on the threshold where you might not even have to announce that, other than, I mean, you might buy 1% of whatever, and you could electively say put it out on the wire with an 8K, or you might wait for the quarter and put it out in your 10Q, or you might just say 1% is so immaterial on a huge balance sheet that we're not going to disclose. We're just going to call it other assets, right? And so that's one of those interesting nuances, and there's a little gray area there. But if that was 50% or 30%, now you go through the issue of, do I have to disclose the potential of doing that to shareholders before I do it?
Right.
Like, would you actually announce to the entire world that you just put $5 billion into Bitcoin overnight? I don't think they would have done that.
Yeah.
But could you do it? You could do it, but you would be wise to say, we're thinking of doing it, right? You would announce that we've now changed our treasury policy, and over the next 12 months, we may, in fact, subject to market conditions, invest a substantial portion of our treasury into Bitcoin. That's what you would say. Yeah. And you would let the market digest that, right? And by the way, you might be more conservative. You might do what we did, which is to say, well, we're thinking of doing it. And then you say, well, we're going to invest 250 million in Bitcoin, but we're also going to buy back 250 million worth of our own stock at a premium. So if you don't like it, you have an option to sell out at a premium. You can get off the train, right? You either get bought out of the partnership at a profit, or you stick around to see how things work. And that's, if you had a partner and your partner walked into your office and said, Peter, I'd like to invest all of our treasury or half our treasury in Ethereum, and you thought Bitcoin was a better idea, you might be irked if he said, I already did it.
Well, yeah, I would be.
And so the respectful way for him to do it would be to say, Peter, I feel strongly about this. I want to do it, but if you disagree with me, I'll buy you out at a premium.
Okay. But did anyone freak out anyway?
It was remarkably smooth.
Mm-hmm.
It was incredibly smooth. In fact, we announced this, and then we talked to some of our investors, and the majority of the investors we talked to said, yeah, that seems pretty progressive. I get it.
Amazing.
And then I heard one, there's one story. I was like, well, there's this one investor who's not going to like it, and so get ready when you meet him. And so I met the one investor, and And he said, "Yeah, so tell me about the Bitcoin thing." And I said, I started with my spiel of we think we're going to get a negative 10 to 15% real yield on our cash, and we didn't want to defund the entire treasury. We couldn't like drain it all. We needed to keep it somehow, and so Bitcoin was, in our opinion, the strongest thing we could do that would keep our treasury purchasing power, that would give us a hedge against inflation. And let me tell you why it's better than other things. And he goes, "No, you don't have to. I know Bitcoin. I own it."
Right.
So 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 his issue wasn't I don't like Bitcoin. His issue was, why can't you just give me back all the money? Like, instead of buying back 250 million, why don't you buy back 500 million worth of the stock and just give us all the treasury, and then I'll go invest it the way I want. And look, I respect that. It's like, yeah, nice. I know why you want the 500 million to invest, but the problem is if I drain the treasury, I decapitalize the entire
Yeah.
company. And if I decapitalize the entire company, and we come into an unexpected negative event, we're insolvent and we're bankrupt. And if we go insolvent, that causes me to break faith with every one of my customers and every one of my employees and every one of my creditors and every one of my counterparties. And that's not a wise way to run a business with zero treasury. So let's just try half and half,
It's
right?
it's treasury. Just to help me understand, because I don't know how it works out in the US. But it's treasury post tax. So have you paid your kind of corporation tax?
Generally,
Yeah.
it's possible to have treasury balances in foreign subsidiaries that are not repatriated. Having said that, I think the tax law, like the tax code change of 2018, they basically imposed a repatriation tax on everyone unilaterally, whether you wish to repatriate or not. And so we had the problem solved for us by that tax,
but
where I think we had the tax, we paid the tax, and then we had the option to repatriate it. So for us, we had all the capital after tax.
But if Bitcoin goes up in value, and you have to liquidate any of it, is there an incremental tax on that you have to pay as well?
Okay, the tax code is you only pay tax when you sell it, and you realize the tax when you sell it. By the way, you would realize the tax if you transferred it as a payment, or if you received it as a payment, you would mark it on your books as with a basis. So it's a very important nuance. If I owed you a bill and I paid it with $100,000 worth of Bitcoin, I would look at the price of Bitcoin on the day that I paid you, and it would be as if I had sold the Bitcoin. And if that generated a taxable event, then I would owe that tax. So the use of Bitcoin as a currency per US IRS tax code, and I think this is tax code in most of the Western world, would be taxable on transfer or on trade. It doesn't matter whether I sold it or whether I transferred it. So in that particular case, if we buy $100 million worth of Bitcoin and it's in our treasury and it goes up, there's no tax until we sell it.
Okay.
Now you said, well, Mike, what if it goes up and we have to sell it? Well, that's a non sequitur.
Yeah.
I don't have to sell it because it went up. I have to sell it because I got hit with an unexpected large bill, because of some pandemic shock.
Yeah. No, that's what I meant. That's what I meant. Like, if there was a situation you were forced to sell it, do you have like another tax to pay on? And do you just pay it on the incremental additional earnings?
If we had 100 million in Bitcoin and the price didn't go up, and if we had a shock and we needed to raise 20 million, we would sell 20 million worth of Bitcoin, pay no tax because there's no capital gain in it.
So it's just a capital gain.
If we had 100 million in Bitcoin and it went up by a factor of 10, and we had $1 billion and we had a shock and we needed 20 million, we would sell 20 million, and that 20 million would have a large capital gain in it, 10 to 1. So it would have an $18 million gain in it, and we would owe what ordinary long term 28%, or maybe income tax, maybe capital gains tax. I forget, but let's say 30%. We would pay some tax bill on the gain, not on the basis at the time that we sold it.
Right. Okay. All right. So you've pulled the trigger and you've gone through it. You've done the purchase. You've custodied, but through the whole process, like if someone was listening to this and they're thinking about it for their company, what were like the most important key lessons that you learned? And did you even make any mistakes? Was anything in the process like, shit, we should have done that differently?
I don't think we made any mistakes. I thought the execution was pretty textbook. I mean, from how we made the decision, how we went through the corporate governance, all the deliberation, all of the disclosures to the public, the mechanics of the acquisition, the 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 perfect synchronicity of the tender offer with the acquisition. All of these things were important, and then the subsequent disclosures. Um, if I was giving advice to someone else, I think it would depend upon whether they're a publicly traded company or they're a private company. I think if they're a private company, then it just becomes much easier. Then you just have to go through the due diligence, the deliberation, build consensus, establish your trade relationships, and then after your trade relationships, execute. Um, I think if you're a public company, then you've got the additional steps that I outlined. And then public company, it's a very different thing because every company has a different capital structure, has a different shareholder base, has a different set of expectations. For example, if you were Warren Buffett, it wouldn't be very hard for Warren Buffett to do this at all. Warren Buffett could say, we bought $2 billion worth of Bitcoin. We bought 5 billion worth of gold miners. We bought 10 billion worth of Apple. We bought this. We bought this. If you're an investment company, it's very straightforward. If you're a high tech company with a very small treasury, and then it might be viewed as making a small treasury illiquid. But if you've got a massive treasury and you don't need the money, like if you're Apple, Twitter, Square, they don't need money. I mean, they don't need the treasury. They're generating cash flows that are insanely great. And the likelihood in the next 5 years or 10 years, it's almost impossible for those businesses not to generate cash. Right? Just almost inconceivable for YouTube or Twitter or Apple, right, to not generate cash. Maybe at Netflix, because they get this capital intensive business where they got to go spend hundreds of millions of dollars to buy content or make movies. But if you have a pure digital network, Facebook, they're just going to generate cash. So I don't think it's that much of a risk for them. It's just a little bit more of a disclosure issue because people aren't used to seeing Facebook invest in equities, debt, or other alternate assets. Insurance companies, though, Warren Buffett created an insurance company. Talk about aggressive. What if I bought an insurance company with MicroStrategy stock, and then the insurance company had 2 billion or 5 billion in assets in government bonds, and then I sold the bonds and I bought Bitcoin with the $5 billion worth of insurance assets that are being held in trust for widows and orphans and life insurance funds to pay off 30 years from now, or a pension fund, right? That would be an interesting move. But by the way, it happens. I mean, there are insurance companies that do buy equities, and at some point other institutions could invest in this. But that's the summary is everybody's different, and they've all got different circumstances, and so they'll go through their own journey, I think.
Have you had any CEOs get on the phone to you and say, "Can we talk about this? What have you done? I'm interested."
I'm making some new friends. I'm making friends. I'm meeting people, and I'm meeting people in the industry that have substantial sums of money, and they're thinking about this. in a very deep fashion now, and I'm giving them advice. And I look forward to giving more advice. And if anybody, any of your listeners know of anybody that runs a company, private, public, or otherwise, that wants to get the full blow by blow inside scoop, hook them up with me. I have infinite energy to take people through this. There's a lot of stuff that I could tell them that I just can't post publicly and I can't share publicly for security reasons or other reasons. But yeah, there's a lot of conversations going on, and I expect there'll be more in the future.
Well, I mean, you have an incentive to do it. You own over 0.1% of the Bitcoin supply, right? More people come on board. It's gonna prove your bet.
Peter, I have an incentive to do it, but for the record, and I want to be very clear about
Yeah.
this, my number one reason to do it is I want to help the maximalist. Like I really think the heroes, the unsung heroes, the people that really they saw the future, they bled for the future, they dragged this thing on their back, they went through hell, they fought Fork Wars 1, Fork War 2, they stood up against the establishment, they stood up against the miners, they stood up against the exchanges, they were betrayed who knows how many times, and they got up and they kept working, were the Bitcoin maximalists, and they deserve this, right?
Yep.
Out of respect to them, I would do it for them. I mean, I just feel like they deserve this, right? And people ought to show them some respect. It matters.
Also, actually, interestingly, so it can do some weird things in terms of the valuation of MicroStrategy, right? Because I guess if somebody, say Bitcoin did a 10x and your position ends up becoming worth $4.5 billion. If someone was interested in acquiring MicroStrategy, and you're like, "Yeah, I'm done. I'm happy," then I guess what would you release that and distribute it amongst shareholders, or do they end up having to buy the whole thing? It's kind of it puts you in an interesting position.
You know, I'm able to speculate about the future of Bitcoin as much as you want, but but I'm not really empowered to speculate about the future of
That's
MicroStrategy and
fair.
what we would do or not do in a hypothetical situation. And and so I will let you do
I'll
that.
do that.
What I will say is something a bit more topical, which is if someone throws you into a sea of liquidity and you fell off a ship and strapped around your neck was a $500 million block of concrete, and it was heavier than water. Not so heavy that it dragged you down. Let's say it was a $500 million block of concrete that sort of floats a little bit, but it's slowly sinking like 10 feet a year, 20 feet a year. And you've got this leash on you. And you thought, maybe I have a one time chance to convert a $500 million block of concrete into a $500 million crypto arc or crypto inflatable. And that's going to float on top of the sea of liquidity. I might go ahead and pull the ripcord, inflate the raft. I might cut the line to the 500 tons of concrete. I might crawl up into my crypto raft. And if you ask me why did I do it, I did it to not drown, Peter.
Yeah.
Right? I didn't want to drown. But then if you said, well, Michael, what happens if the sea rises by 100 feet or the crypto sea keeps rising? If they just keep pumping more water and it rises and rises and rises and rises, I'm like, well, a rising tide lifts all boats. I would just like to be in the boat. So when I look at it, I think, yeah, if Bitcoin is successful, that's good for us. And if people keep printing more money, that's probably on the margin. I'm better to be in the inflatable that's floating on the money than be swimming with the concrete block around my neck that's sinking with the money. And that's how we look at it from a financial point of view. And I think that that's the essence of Bitcoin as a treasury reserve asset. The whole point is to float and not sink. And by the way, other assets are floating. The reason we had a K-shaped recovery is because the bonds and the stocks in the market were floating on all of the money, all the stimulus money that was being printed by the Fed. But on the other hand, all these Main Street businesses are not floating on it. Right? They're they're basically chained via, to an anvil that is holding them down as we basically pump water into the room.